Hey guys, David here, and welcome to Digital Outlook. Guys, in today's video, this could be your chance. Don't miss it. So guys, let's get to it. So guys, something to share is this. Judy and I have been in this digital asset space for years, and it totally revolutionized our lives. In fact, in a lot of ways, and not just in finances, but in relationship experiences, and you name it. Now, we have been through all the FUD, the mud, and the blood. And one thing I can tell you is this: it could happen so fast that you could miss it in a blink of an eye. And guys, I want to show you this article right over here. Listen to this right here. XRP poised for breakout as whale activity surges amid market uncertainty. Now listen to this right down here. XRP is currently experiencing a notable consolidation, characterized by increased trading activity that has caught the attention of market analysts. Recent data from CoinGlass indicate that XRP's, get this, trading volume has surged by 82.22% within the last 24 hours. That's phenomenal, reaching an impressive total of $868.67 million. This spike in trading activity could signal a shift as major market players re-enter the space, potentially setting the stage for a price breakout. Well, guys, one thing to think about when you interpret these kind of articles, where do you think that this 868.67 million is coming from? It's a big question that you want to answer. Do you really believe that that's retail? Almost 900 million, close to $1 billion? Guys, we know that it isn't. When we see this kind of stuff, we can see institutions are going big time over XRP. And when you look at the difference in 24 hours, do you think retail's coming out with that in 24 hours on Labor Day Monday? 82.22%. Guys, it is not. And that should tell you and I volumes. Why? Because do you believe that these these institutional investors, apart from retail, are out there putting in tens of millions of dollars into this ecosystem with the expectation of just losing that? And think about it in this way too. A lot of the FUD that goes out there, where is it directed toward? Is it directed towards institutions? No, it's not. In fact, we know that institutions, big time, 20% of all institutions are exposed to XRP. Now, that is phenomenal when you consider it. And what are institutions looking into XRP and the XRP ledger for in a lot of ways? Real world asset tokenization, guys. Exactly what David Schwartz and Brad Garlinghouse have been saying, exactly what we've been hearing from Larry Fink about the tokenization of securities being the next evolution of these markets, on and on. And the thing is this, a lot of times retail does not have an opportunity to front run institutions. Basically, if you want to invest in things in an institutional marketplace like it has been before, you have to be an accredited investor. That means you have to be liquid, $1 million, or have had multiple years of high six-figure income and that kind of thing. This is probably one of the only times in history where retail has been able to get into a space and front run institutions, but that window could be closing and fast. Now listen to this right here. The dramatic rise in trading volume suggests that significant investors, colloquially known as whales, are making strategic moves in the XRP market. The leading cryptocurrency exchange reported a remarkable 309.11 million in XRP trading volume, further emphasizing that the heightened interest among investors. Following closely are platforms like Bybit and BitGet with trading volumes of 168.98 million and 139.10 million respectively. This influx of trading suggests that many of these large players are capitalizing, now get this, on lower price levels while they last, demonstrating confidence in XRP's potential for future gains. Listen to that. And they got us out there trying to be afraid of our hundred, maybe thousands of dollars that we're putting in. And something else to think about, because I've heard this FUD come out as well. Well, that's just all of them selling. Well, I'll tell you what, guys, for everyone selling XRP, someone else has to be buying it, doesn't it? And 309.11 million in Binance alone, that is not retail buying that up. That is institutions buying that up. I suspect there's retail out there selling, and maybe there are some institutions selling, but the institutions that are looking at it down the road for its potential, boy, are they ever buying. They're gobbling it up. So don't just listen to that. Oh, well, it's only institutions selling. That's why trading volume has gone up. No, for every sale, there has to be a buyer. Guys, think about that, and on and on and on. Now, something else to really think about is this, and I thought this was really amazing. When you consider you've got all of this volume going on and things like that, and you're looking at a lot of these platforms, and their availability for you and I to get on. How many times have we seen these exchanges literally close the taps? It's happened so many times. And in fact, just recently we've seen, like, some of these exchanges like Uphold. Uphold wasn't up for a long, long time. And it was amazing to me during that last run, during major spikes in activity, a lot of these exchanges went down. You couldn't even get on the exchanges. And guys, that is another thing to think about. Do you think you're going to always have access? Oh, yeah, it's always available. I'm just going to be, gobble it up whenever. There could very well be a supply crunch. And think about this too. If you're looking for a solid off ramp, do you want to be trusting in one exchange that's your only marketplace that can literally maybe close down during that high level of activity when you're looking to sell it at top dollar? Do you believe that that the market closes down when those exchanges do? No, it does not. It's a 24/7 365-day market. And this is why for Judy and I, we shot out there and we went with Caleb and Brown, because look, I can call my broker. He has access to every market at one time, all these exchanges. Plus, on top of that, he's got access to private buyers and sellers. And guys, we've got a link in our video, and we share this all the time, where you can go out there, you can sign up with Caleb and Brown. It costs you absolutely nothing to do it. The only time you ever pay a fee with Caleb and Brown, by the way, is when you buy and you sell. You can talk to your broker as many times as you like. You can custody your crypto there as many times as you like. But with this stuff going on, look, guys, I really do believe it is so incumbent upon us to get out there, genuinely research and find out if it matches up with our risk tolerance. And if it does, and that type of thing, you may want to consider not missing. And a lot of people have missed it. Look, in times past, they just were dinkering along like that, and it just capitulated their positions. And for everyone selling, yep, someone else was buying, and boy, did they ever see those gains. 2017, phenomenal. Even 2020, from a traditional aspect, you're watching an asset in 4 months move 1,200%. When are you ever going to see that? In a traditional market? You're not, guys. That's why I believe this digital asset space offers some of the greatest opportunities that we as retail investors could ever possibly see. Now, as the market embraces this renewed activity, the potential for an XRP price rally can't be dismissed. Historically, significantly buying from whales has correlated with bullish price movements in various cryptocurrencies. Currently trading at 55.49 cents, XRP has experienced a minor dip of 0.68% in the past 24 hours. But it's essential to note that the decline pales in comparison to other cryptocurrencies such as Bitcoin, which has dipped 8 to 10% over the same period. This relative stability may indicate that XRP is well positioned to take advantage of any upward momentum fostered by renewed investor confidence. Pow, right there. Analyzing market sentiment reveals XRP has maintained a firmer footing than many of its competitors despite the overall bearish tendency experienced since earlier this year. A decrease of just 3.38% over the last 30 days points towards XRP's resilience and investor faith following its brief rally in August. Contributors to this confidence might include recent developments with Ripple, the blockchain company associated with XRP, as well as wider, get this, institutional acceptance of digital assets. That's exactly what we are seeing now. The corridor could totally close, especially with regulatory clarity. And something I'd like to point out to my Canadian viewers, remember what the government did in limiting individuals from spending more than $30,000 annually into this space, into these alternative coins like XRP. Now, why oh why does the government not give two hoots if you went down to Vegas and spent your life's fortune and blew it in a slot machine, but they're so concerned that you're out there investing into XRP? Come on, guys. That doesn't even make common sense. But that's the kind of things that are going on. And with regulatory clarity, who knows what kind of restrictions they could put on you and I from holding this. Perhaps they might come out and say, hey, you're going to have to be an accredited investor or something like that. We don't know, but we do know that it is absolutely coming. And we know that the SEC is on the attack like crazy when it comes to this digital asset space. That is for certain. Now, experts suggest that a decisive rally driven by whale activity could see XRP enter an extended bullish phase, which could be transformative for both the asset's price trajectory and its long-term market position. Now, in summary, the recent spike in XRP's trading volume driven by whale participation hints at an optimistic outlook for this cryptocurrency. Market history suggests that increased activity from influential investors could lead to significant price movements in the near future. Investors should keep a close watch on these developments, as they may indicate that XRP is on the verge of a crucial breakout, potentially leading to an extended bullish trend. Wow. Now, guys, just also check this article right here. XRP Ledger, not just XRP, but Ledger, enhances security with the latest unique node list update. New validator added. Now, guys, this is significant. And the reason I'm pointing this out is we are just watching this XRP and XRP Ledger ecosystem expand. And as it does, they are out there building more security, more confidence, more, investor encouragement for what's going on. These changes are significant, and they were going to have lasting long-term impacts. Look down the road at how this digital asset space is evolving and changing the way world finance even works. Now, listen to this right here. Significant changes to the unique node list. XRP Ledger has implemented an essential update to its unique node list, which serves as the backbone of trust in the network. This list consists of validators crucial for confirming the accuracy and order of transactions within the ledger. The recent alterations reflect a proactive approach to ensuring that the validators are capable and current, thereby upholding the integrity of the entire ecosystem. Big. Now, at the core of XRP Ledger's operational framework is a consensus algorithm, heavily reliant on a majority of agreement among validators in the UNL. To ensure that this process remains robust, the latest update includes the addition of a new validator, Interledger, while simultaneously removing FTSO.EU, the infrastructure provider for the Flare network, which has chosen to refocus its efforts solely on its primary platform. This strategic decision underscores a significant shift within the validator landscape, aiming to enhance the security and functionality of the XRP Ledger. But guys, don't be shocked if you hear fuzzsters coming out and saying, oh, the Flare network, they left the XRP Ledger. Guys, they are not abandoning the XRP Ledger. Flare literally built its infrastructure depending on the XRP Ledger. Remember the snapshot and what's happening all now and this and that, with the F assets and on and on. They're focusing more on their own primary platform. That is exactly what it is. You can go and research it for yourself. Don't let yourself get too fudded out, that's for sure. Now, the importance of keeping the UNL up to date cannot be overstressed. With the recent increase of Interledger to the list of validators, there's potential for improved transaction processing capabilities. The removal of inactive validators ensures that only engaged and functional nodes are tasked with validating transactions, which is vital for maintaining overall system health. As the crypto landscape continues to evolve, the XRP Ledger Foundation's unveiling of the updated UNL serves as a reminder of the complexities surrounding XRP network governance. By enabling innovative validators like Interledger to participate, the foundation is positioned for the XRP Ledger for greater adaptability in a rapidly changing environment. And as we know, is this digital asset space one of the most fastest evolving marketplaces and ecosystems that there is for certain, right? Assertions from the removed validator FTSO EU indicate a realignment of priorities, focusing resources on their network without compromising the integrity of the XRP ledger. In summary, the XRP ledger's recent UNL update marks a pivotal step in ensuring that the security and the efficiency of its network. The addition of Interledger and the removal of inactive parties underline the ongoing evolution within the ecosystem, laying a stronger foundation for future scalability and resilience. Stakeholders will want to keep a close watch on how these changes impact the overall performance of the XRP ledger as it adapts to the demands of burgeoning crypto landscape. Guys, how much development have we seen on the XRP ledger? I mean, phenomenal volumes of development. And I want you to think about something. Since the XRP ledger has been in function, since they actually turned back in 2013, do you know there's been 90 million, get this, 90 million closed ledgers, not one mistake. Not one mistake. That is phenomenal. And guys, it is because of these updates. This ecosystem has only just improved and expanded and improved and expanded. It's the fundamentals, isn't it? It's looking down the roads. It's not the day-to-day minute little price action and stuff like that, guys. That is not why we're here. We're here for how this space is going to pan out in the full-on adoption and utility. And I'm going to tell you something. It's my personal belief. It is going to send this asset to the moon. Now look at this right over here. I think this is a big-time deal. Ripple Chief Legal Officer flags the U.S. Securities Exchange Commission to move to manipulate legal proceedings. Boy, are they ever up to it again. Listen to this right here. Ripple Chief Legal Officer Stuart Alderati has challenged the U.S. Securities and Exchange Commission, accusing the agency of trying to manipulate legal proceedings that involve crypto companies. Now, in a recent X post, the Ripple executive highlighted the term crypto asset security, mentioned in an SEC filing, has no legal, there is no such thing. There is not a crypto asset security. Look, a security is an investment contract, a stock or something like that, where a third party is literally responsible for working on the investor's behalf to bring them a profit, right? You're depending on the efforts of others. Digital assets don't have that, guys. That's why Judge Annalisa Torres nailed this. He nailed it, utilizing the Howey test. It's like literally saying the oranges in the orange groves would be securities. I bring this up all the time. It's the best analogy there is, because the Howey test is what they're using to determine what a security is. Well, that was based on investment contracts on orange groves, not oranges themselves. If oranges themselves were the security, then like I say, every grocery store in America would have to register with the SEC to sell those oranges. XRP in and of itself is not a security. Now, can XRP be wrapped in an investment contract that is security? Yes, it can, and it had been, and that's why Ripple had to pay the $125 million fine, because a lot of those contracts back there in 2013 to institutional investors absolutely were investment contracts, represented securities. Their ODL now is written a way different way, and there's no contracts involved. So they're not securities, and that's why they can still operate and sell XRP to institutional investors right here in the good old US of A. but definitely digital assets are not crypto asset securities. Now, the commission has gone up against FTX, the Bahamian headquartered crypto exchange that imploded in 2022. Following the misappropriation of customers' deposits, the bankrupt exchange is trying to refund creditors impacted by its collapse 2 years ago. It plans to repay users up to $16.3 billion under a new restructuring plan that uses cash and stablecoins. For context, stablecoins are crypto assets pegged one-to-one with fiat currency, of course, that. Now, however, the US SEC is against this move as it insists that it maintains the right to challenge transactions involving crypto assets. How rich is that, guys? Because SBF was in there visiting with Gary Gensler all the time. And was there ever any issue brought up against the FTT token that FTX was pumping and dumping and all that? No, there was not. And was that ever a security? Absolutely. ICO, the whole bit. What a load of hooey. And now that you've got the trustee going out there and wanting to refund these creditors, you got the SEC getting in there because, wow, there's $16.3 billion on the table. We want a piece of that pie. It is absolute, utter hogwash. But this is what you got going on. You got regulation by enforcement, and this is why we need an absolute regulatory clarity in this space and a change big time. We have got to get out there and change the guard and get some of these guys that have been in these offices, these bureaucratic positions, right out of there. They literally feel like they're czars, as they say, and have absolute dictatorial jurisdiction over the entirety of this space. It's truly obscene. Now, the agency tried to question the legality of stablecoins under the present securities law. The SEC noted that FTX's portfolio includes crypto asset securities, which, quote unquote, which it now plans to monetize and repay creditors. This categorization by the commission forced the Ripple chief legal officer to weigh in on the matter. He made it clear that such a term could not be found on any statute. Boom! Right there. These guys are not the lawmakers, right? They're the ones that are there to follow the law. Who makes the law, guys? Well, it's Congress. Who puts people in Congress? It's you and I, isn't it? So ultimately, we're the ones going out there and saying, hey, these are the things we want. These are the laws. It should not be coming from top down. It comes from bottom up. That's what a republic is all about. But yet the SEC and, of course, Gary Gensler, they don't want that. They want us to literally just kowtow to everything that they have to say. How many cases do they need to lose in court, blowing millions upon millions upon millions of taxpayer-funded money to do it? Guys, we need a change. That's why this coming election, you want to get out there and support folks that support this digital asset space and what innovation and invention it could literally bring, and absolutely could be one of the catalysts that pull this country out of the economic disaster that it's in and really set up future generations for prosperity in ways most of us haven't even thought about. Now, let me just see here. Yeah, the Ripple CLO, advised the agency against using the term while suggesting that it was out to deceive judges. It's worth noting that the 3 weeks have passed since Judge Annalisa Torres demanded that Ripple pay a fine of $125 million in its legal case with the US SEC. Beyond Ripple, FTX, and the SEC's new battle, meanwhile, the act of cracking down on crypto exchanges is a major trend with the US SEC. Robinhood, Kraken, Consensus, Uniswap, Coinbase. Do you think it's about the exchanges, guys, or do you think it's about the industry? I think there's a lot behind this envelope, that's for sure. Have been caught in the SEC's crosshatch in the past. Non-fungible trading platform OpenSea received a Wells notice from the Gary Gensler-led commission, which is absolutely laughable. When back in the 70s, they said, hey, when you're dealing with art and you're having, all these, art galleries and things like that, selling art. Well, when you sell art, that is not a security. Wow. A lot of people buying art for the investment prospects of it appreciating, aren't they? But that's not, but oh, it gets into the electronic format, and absolutely, it must be a security. How insane is that? They're going against their own rulings. It's truly wild. Now, the regulator believes that digital collectibles traded on NFT marketplace are securities. Of course they do, because it's a digital investment. But oh, a piece of art in an art gallery isn't, guys. We know it's absolute nonsense. It's utter nonsense, but that's where they're going. Similarly, Uniswap also got a well notice from the regulator months ago. Significantly, the crypto industry is hopeful that with the coming of the new government in November and hopefully ousting Gary Gensler, the crypto regulatory landscape will improve. And guys, I believe it will. The thing is this, isn't it amazing how focused the SEC is just in this digital assets? But aren't there any other major industries? Why aren't we hearing about all that? Guys, you know why? Because this is the future. And I'll tell you what, do they ever want to hold us back as retail from absolutely being able to front run all these institutions? It blows my mind. These guys are not, the SEC is not out there to protect the retail investor. Because I'll tell you what, when they dropped that lawsuit on Ripple, think about this. For months, people were FOMOing into XRPY to become participants of that flare snapshot. The SEC knew that. Did they issue any warnings to the public? No, they didn't. They just, on the last day, oh my goodness, my brain just slipped. But basically, they waited until the very last moment. And boy, did they ever drop a lawsuit on Ripple and to hurt this space. And how many people had already got into XRP because of the flare snapshot and that kind of thing. Guys, don't let yourself get clouded by the noise. Just look at what's going on over here, the development that's going on. Get out there, really research it of where we are in history and how it could impact the future. I don't want you to miss it, guys. For Judy and I, we've been out there, we've researched this, we've assessed our own risk tolerance, and we're taking the plunge. We've taken the plunge big time. And that's where I'm encouraging you. You get out there, you really research it, you get to the end of that, and you make up your own mind. Guys, with what's coming, you do not want to miss it. And I want you to be standing right there in the middle of that winner's circle when we cross that finish line. So guys, I talk to folks every day about their strategic plan, and a lot of them have thought they had their plan all together until after we talked, and then they're like, oh my goodness, I'm not as ready as what I thought I was. And guys, that is why it is so vitally important that you get your plan in place. And what our coaching program offers, that is where you and I can meet personally, one-on-one, for 1 hour over Zoom. And during that time, I share with you our personal journey in that last bull run and what enabled Judy and I to experience some amazing financial success. I share with you the mistakes we made so that you don't have to fall into the same pitfalls we did. We take a look at your portfolio and make sure that it's balanced toward your goals, and we work together to develop your exit strategy. We can even get your assets off an exchange and onto a hardware wallet, along with delivering to you some amazing techniques that are really going to help you in this space. Now, the cost of that is $250, and if that's something that interests you, you write me right there at coaching@thedigital.outlook.com, and we'll get y'all booked in. So guys, I truly hope that you enjoyed today's video, and as always, it's not financial advice, it's just my 2 cents. Hit the like and subscribe and drop your comments right down there in the comment section, and I'll catch you in the next one.